Welcome to Tuesday's Market SITREP here at Top Gun Options. Matthew Buckley, my call sign is Wiz, and day two of trying to navigate through this whatever it is, walking pneumonia, crud, funk. So hopefully we'll get back on the flight schedule tomorrow with our accelerated retirement at 1 o'clock for our members. In the meantime, though, a lot of clown car activity going on in the market, which we'll get to. But we're flirting with that Dow 20,000. Who cares? I really don't care about the Dow, first of all. But financials and industrial stocks are kind of pushing us a little bit higher today. Dow's up maybe 60, 70 points, and the S&P is up about 10. The bull put spread that I sent out yesterday in lieu of the weekly options live trade brief is up about $600-700, about 32 to 35% just in a day. So nice trade there. Also taking a look at oil, cracks me up. Despite the OPEC cuts, Iraq to boost February oil exports to record high. So we laugh about this stuff all the time. OPEC has a deal, but will its members cheat? Yeah. And then who else is jumping on board here? Libya ramps up oil production, threatening OPEC plans. So we looked to put on a bear call spread on XLE last week. I didn't get filled. Some of you folks did. Let's take a look at the XLE real quick. It's getting back into that, we're a bunch of cheaters range. Where it's iron condor time. So the XLE, see, there we go. Perfect. We traded it back here for a while. Then we had this, hey, we got a deal. Everybody's going to live in peace and harmony in OPEC. I said that's not going to happen. And then here we go, range bound again. So we're in the bottom half of this range. And I'd look to get bullish on XLE here. And just, it tends to be range bound until it has an event. And this event was the agreement, obviously. But now with the non-events and hearing that nobody's going to cut, guess what's going to happen with it, okay? You would think it would just go down and implode, but it doesn't. It kind of holds in a range until there's an event, like I said. So keeping an eye on XLE today. But the main thing I wanted to focus on today is this. This is just pure comedy. Pure, absolute comedy. When one bank downgrades another bank. I mean, I've been in, a boardroom in Chicago, and it's comical when it really is, two banks shooting broadsides at each other. It's one big furball. So Citi is saying, hey, Goldman is way over its ski tips here, and they put it as a sell, not even a hold. I mean, you would think the blue bloods would be gentlemanly to each other, and they're not. So they're essentially citing Goldman Sachs valuation, and our Goldman Sachs position is up nearly 10 grand in this is officially about a month for me since I put this trade on. 10 grand in a month. So, and I know I've recommended Goldman September, October, November, and finally got filled on a trade in December, and mainly because I didn't want to pay too much for that muffler, right? I kept saying, oh man, I'm going to have to, well, I finally decided to pay up. Look at this. There's the election, level off, another rip your face off rally, level off. We're going up on Goldman Sachs, folks. Here's why this is comical. I think they put the price target at 225 by the end of the year, which is obviously underneath here. I think Goldman Sachs is a $300 to $350 stock by the end of the year. Print that, take it to the bank. There's three dudes from Goldman Sachs in the damn administration. We're back to the time where there used to be a revolving door between the Fed, Commerce, Treasury, and Goldman Sachs. And the other banks haven't upgraded, or not necessarily upgraded, come out with new valuations on Goldman Sachs. So it's, and here's the, they kind of tipped their hat to Goldman. While we expect Goldman will see improved trading revenues going forward, the path is relatively uncertain and the bar is relatively high. Okay, well, I think the path is relatively certain. The Fed's raising interest rates. Their FIC divisions, fixed income, currency, commodities, are going to start printing money. Steve Mnuchin from Goldman Sachs is going to repeal or gut Franken-Dodd. So I think the bar is relatively low. I think it's undervalued, and I think Citi is wrong. And you know why I think Citi's wrong? For my members who printed money with me through the election, Citi, it was Monday before Election Tuesday, came out with I don't know if the Clintons paid them to do this. Remember this report? Citi came out and said, if Trump wins, the market will go down 5%. What did I say? I said, not only is Hillary going to lose and Trump wins, the market's going to go up 5%. I was wrong. It's gone up higher than that. So if you're going to listen to Citi downgrade Goldman, why don't you take a look at what they said was going to happen with the election? So, taking up a lot of time on this. Why? Because when I see stupidity, I point it out and I trade the exact opposite. So, for all my members who haven't had an opportunity to get into Goldman Sachs, now is the time. Even watching my buddy, the Nigerians I'm laid up on the couch, so I'm watching Comedy Central, CNBC. They're like, they love Goldman Sachs, but what are they saying in lieu of? Well, you got to stay in the sector. They're actually talking about J.P. Morgan. Well, we have a couple J.P. Morgan trades on, and XLF, and the XLF is printing money as well. Let me just go over to this portfolio. So, as I said, maybe I'll send that out as my urgent alert for the week. A new trade on Goldman Sachs, a Jan 19 long call diagonal. I mean, this is a no-brainer, folks. And I've told my members any pullback in Goldman Sachs is an opportunity to get in. It was down as much as 1% today, and now it's down about 0.5% and gaining all that back. So, my apologies for not shooting this sooner, but and if you're a current member in a long call diagonal on Goldman Sachs, I'd be looking to add to that position. This is just it really is comical when these banks do this to each other. They downgrade each other. So I guarantee you there's about 20 cubicles in Goldman Sachs getting ready to downgrade Citi. Wow. So here's our bull put spread, the weekly options trade from yesterday. That's up 39%, $750. If you like making nearly $800 in a day, I'd look to close this trade. My mission objective in the weekly options portfolio is to average $1,000 a week in gains. Do the math and annualize that, and that's a hefty return. So anytime I see close to $1,000 in a day, I'd be looking at getting out. But with this position, I might actually leg into an iron condor since I think we're going to channel into the inauguration. So there's 825. 42% in a day. And if we rally even more, if this hits 50% in a day, that'll be about $900, $950. I'm out. Okay. So weekly options members, there you go. Nice one-day trade. But here's our JP Morgan. One of these trades is up nearly $25,000 in, I think this is 6 months. 7 months, whatever. It's averaging $3,000 to $4,000 a month, and then this newer one that I put on last month, kind of with the Goldman Sachs trade, is already up $5,000. So we're printing money in our financials, folks. And if you're going to listen to Citi and get out of Goldman Sachs, I think you're a fool. Okay, and that's the way I see it. Not too much else going on. Like I said, I'll try and get back on the horse tomorrow for accelerated retirement. And get back on our flight schedule here. Weekly options will be on Friday at 1, and then the primary live trade brief will be Thursday at 1. Okay, have a great rest of your day. Happy hunting. Make sure you hedge, and I'll talk to you guys.